So, have you been one of these people that have been trying their hardest to get their FICO score as high as possible to take advantage of these low interest rates? Well, I have good news for you. Hi, this is Israel, your loan officer down here in Southern California. And on these videos, what you're going to find is financial tips, market news, and what those mortgage rates are at as of today. So with that, let's go ahead and get started. How's it going, guys? Today is December 10, 2020. And what do I have for you today? I'm going to start implementing these two slides once a month. It's basically what the number of units of single family homes that have been sold down here in Southern California. I'll be picking different cities, but for now, this would be for the LA County. As you can see, orange numbers, orange bars would be 2020 versus 2019. Looks like on April, May, and June, due to the pandemic, those numbers were low. But even so, right after July, things started to really pick up. And as of November, there was 15,761 single-family homes sold versus 13,000 and some change the previous year. As of December 10, 2020, so far, we're at 5,962. versus 13,000 as of December 2019. Again, it's almost the middle of the month. I probably see this number being right about here, breaking yet another record. And with that, let's jump on to the next slide. And here we are. This is for the people in Santa Clarita. Same trend. As you can see, it's been escalating right after June. Numbers started picking up. August, September, October, November. December, we don't have the numbers yet, but I know they're going to be quite positive. And take a look at this, 56.5% from the prior year. This is taken into consideration that March, April, May, and even June, everything was shut down. So obviously the market got affected. So I can only imagine if we hadn't gone through those months of shutdowns, these numbers would have been probably in the 75 range, maybe close to 80%. Again, good news for the people in Santa Clarita. All in all, basically means that if you're thinking about selling your home, this is a seller's market. I mean, you just got to see those figures and you know what I mean. Okay, with that, let's jump on to our next piece of information, and it's late 2020, so why would mortgage rates even move? You've seen the news. Dow Jones, S&P, everyone is just breaking records. And so you would think that mortgage rates would be going up, but they're not. And that's the strange thing. It looks like it's going to take a little bit of time, but eventually it will get there, meaning those rates will begin to go up. This is what the article basically covers, talking about the low interest rates. This will not be the case for very much longer unless the broader bond market happens to surge towards lower yields again. What do they mean about the broader bond market? Okay, this is a section that we cover on a daily basis. It talks about the mortgage-backed securities. For all the newbies out there, this is the indicator that tells me where those mortgage rates are going to be heading to. If you see this graph, it's like a roller coaster, right? It goes up and down, up and down. And so by following these trends and these little candlesticks is what we call them, we are able to determine where these rates are heading towards. I put a little legend down there, and this helps, hopefully it'll help you understand what drives these candlesticks. And if you notice, there's a blue candlestick and a white candlestick on this graph. We always want to see these white candlesticks. The longer, the better. Why? Because these are the indicators that will ultimately drive those mortgage rates to go ever low or stay at where they are at. The blue candlesticks, what drives these candlesticks? Well, I put a little footnote down below. whenever you start seeing rising unemployment rates, there's political instability, falling factory orders, higher gold prices, stock market losses, lower consumer confidence. Every time you see this, what ultimately happens is that investors start running away from the stock market or any investment that they have and start looking for safer havens. One of these safer havens happens to be mortgage-backed securities. So what ultimately happens is you have all this huge amount of investors coming in and buying these bonds, which ultimately makes these prices go down. And when we see these prices go down is when we start seeing these white candlesticks, which is what happened today. It wasn't super strong, but still, nevertheless, it was positive numbers. What we want to see is these positive numbers. In this case was 9 BPSs. Now let's see how this translates to mortgage rates. All right, let's jump onto that now. Here we go. For a conventional loan, let me take this out. For a conventional loan, on a 30-year fix with a 20% down payment, were there any changes between yesterday and today? Yes, for all these, for anyone with a 700 FICO, and in range, 700 and up. Yes, there was a little. It went up just a bit. Now the competition, we have the Bank of Americas, the Chases, and the Wells Fargo. Wells and B of A always tend to be at par with us, with the exception of the APR. We always have a lower APR. Now Chase, 2.75. Mind you, just like this program and the next one I'm going to show you, you need a 740 FICO score or higher to be able to get one of these rates that they're offering, such as B of A, Chase, and Wells Fargo. And that's why I'm comparing the 740 versus their 740s. Okay, now let's jump onto the FHA. FHA, you're only required to put down a 3.5 down payment. These are the rates on a 30-year fix. And here's the mega news. Look at this. If you have a 740, we can offer you a 2.25. 700, we can offer you a 2.25. 660. First time we've seen it this low in quite some time. But again, if you were to go to any one of these banks, US Bank, Citibank, start filling an application, or even before you start the application, they'll tell you for you to be able to get a hold of one of these rates that they're offering you, like a 2.75, you're going to need a FICO score of 740 and above. Here with us, 660, we're offering the same rate of 2.25. I mean, yeah, these are really low. All right, guys, that's it for now. Thank you so very much. If you're thinking about buying, hopefully this information will help you make a decision. And if you do, I'm here. You can give me a call at 661-388-7667. If you're thinking about refinancing, same number, 661-388-7667. Shoot me an email. My information's down below. If you're already working with a lender, definitely shoot me over your estimate, and I would definitely mark down what it is that I can offer you. Chances are I'll mostly be able to beat their quote. If you're a homeowner and thinking about, well, I saw those numbers on those graphs and obviously it's a seller's market, wonder what my value is if I were to sell now, do give us a call. We have a great team that would definitely help us out and give you that information as well. Thank you again. God bless, and I will see you guys on the next video. Bye-bye.